Hello guys. Well, did the CPI actually save the US dollar, or did it just ended up pushing it even more lower, in a sense, giving more opportunity for the US dollar to continue to fall? So that's the big question I'm asking pretty much everyone that I have contact, in a sense, as an analyst, and all of the answers I'm getting, it's quite generic. Some of the answers I'm getting, it's, some of them say that yes, possibly the US dollar will continue to go up, possibly the US dollar will continue to go down. So there's no really truth on those answers. And even if you search online, you won't find anything saying that this is what's going to happen. But I found out today something really interesting, and I want to share with everyone about the US CPI and plus about the Federal Reserve from US, okay? So before we go any further, I just want to give a few things before. The first one is make sure to subscribe to the channel and give us a thumbs up on this video. And second, join the Telegram. The Telegram community is growing very fast, and it's really nice to see everyone, always coming to the webinars. Talking about webinar, we do have a webinar today. Today's Thursday, so it's the wrap up of the week. We have one from 4 to 5 p.m. where we'll be digging a little bit more in depth about exactly about the CPI and, about what to expect from now on to the Fed and to the US dollar. Okay, so the first image that brought my attention was exactly this one that you guys are seeing at the moment, and that's the CME FedWatch tool. Look at this image. Tell me if you can, just to, look at these, tell me if you can see anything different. You still have the two blue columns, one it says 93.8, the other one says 6.2. The current rate target is at 425 to 450, but tell me if you can see any difference here from 2 days ago, actually 1 day ago. If you follow that, you most likely will understand what is happening here. And I can tell you right now what's going on. Based on this CME FedWatch tool, we can see there is a pretty much 100% cut priced in for the next coming months, okay? So there's no indecision anymore. Rather the Fed will cut or rather the Fed won't cut. There's no indecision. The Fed will cut, and period. Okay, so that will be really impactful for the market if they don't cut. All right, so just makes sense, just so you guys know, and makes sense if there is any extraordinary move on the DXY up. Now, the reason there is 100% priced in, and I can simply explain that to you, is look at the smallest blue column. Right beneath that, it says 375 to 4. So that's a 50 basis points from where we are at the moment, 425 to 450. As of the biggest column, 93.8% probability of happening, beneath that, we can see it's a 4 to 425. So that means there is a 25 base point more than likely priced in. But there is no pause here. So there is definitely going to happen a cut. It's either going to be 50 or 25. Most likely, as we're looking here, it's a 25. So that just shows how important it is to be following the CME FedWatch tool, and also looking at the central banks and not only looking at the technical analysis. Technical analysis come at last for you to identify the best entry point. Now, this comes first because that actually moved the market first, okay? Now, with that in hand, what can we do? Well, there's a few takes we can, take from that. And the first one, and the most simple one, I would say, is the US dollar, there's only one way to go, and this way is down. The US dollar is trading below the $98 at the moment. Okay, at this exactly moment I'm talking to you, the US dollar index is trading at 97.66, and my next target for the DXY is on 97, so 66 cents fall from now to the next couple months, I would say. And the euro dollar most likely will go to 120, US dollar Japanese yen will go to 140, Aussie against the US dollar will go to 60 cents, and then after that 68 cents by the end of the year. So there's definitely a lot of opportunity happening. Okay, you just need to sort of, lots of people have, that kind of, I don't know the name of it, but the horses uses these things just to have one perception in life that is going to be they have to go on that direction, they have to go forward. If they want to go in that direction, they actually have to turn all the head to go on that. So just take this out and you will see the whole word as 180 degrees. Okay, so you're lucky to be here and being able to see all of that. And that's exactly what I want to show everyone. It's about looking at all of the facets, looking at all the little things that the market is trying to show us, and this is one of them. Now, gold most likely will continue to rally. Okay, at the moment, gold is trading at $3,368. We can probably see gold going all the way up again to 3,500, or even above that, 3,600. That was the target. My initial target since January to December was 3,600. So lots of things are happening, but particularly the CPI did not help the US dollar. It only, I would say, it only made the US dollar probably more fragile than it were already in the past. And investors were just waiting for that tipping point to happen, and now it happened. So we will probably continue to see US dollar down, Euro up, Aussie up, New Zealand dollar up, Japanese yen up, the pound up as well. So all of the things against the US dollar, I'm just looking to buy. And anything looking to buy US dollar, I'm just looking to sell US dollar and buy all the currencies that are on the base and the quote. So I hope I've made a little bit clear and make it more know what to expect from the coming months, from the next few months that we have until end of the year. So hopefully that makes a bit of clarity into your mind. But for me to break a little bit more, and be presenting some trade opportunities with take profit and stop losses level, come today for the webinar. It's going to be from 4 to 5 p.m. Sydney time, and for you to get access to the link, it's through the description on the Telegram. Okay, so you have to join the Telegram, and then I will be sending you, so that hits 4 p.m. in Australia, we'll be sending you the link for you to join. I hope I helped. Don't forget, subscribe to the channel, give us a thumbs up. I see you this afternoon on the webinar, or I see you in the next video. Bye bye.